Hello and welcome to the Real Estate Pro Radio Show. I'm your host, Amber Arms, and we have with us today Brandon Tomlin from Perkiomenville, PA. Hey Brandon, how you doing today? Welcome to the show.
Hey, thank you, Amber. Thanks for having me.
Yeah, absolutely. How you doing? You having a good Monday so far?
I am. I just kind of sat down. I usually start a little bit later on Monday because I have to watch my daughter in the morning. So I'm just getting my day started. How about yourself?
Oh, that's wonderful. I'm just kind of had a really great weekend. You know, we had some family over for a birthday, and just kind of ready to jump right into it as well here. I'm very curious to hear, just kind of your experience with the industry too. I'm very excited for the episode. But before we hop into that, just tell me a little bit about yourself. You mentioned that you had your daughter you had to watch this morning. What you up to when you're not doing mortgage stuff?
Yeah, absolutely. So first and foremost, I would say that I am a proud husband and father. So my wife Danielle and I have our daughter Ava, my little princess, and she'll be 3 coming up here on April 2nd. So we're actually in the planning stages right now of her big 3rd birthday.
Oh, that's fantastic. Everyone always say that the first couple years they go by so quickly. So anytime you get like a special event like that you can, just make a memory and take pictures of that and hold on to that, I think that's beautiful because you can just kind of look back at that in a couple years and, see where you came from.
Yeah, what's funny is like she went from baby to toddler to like little girl, like right before my eyes. And, every single day you don't see like the changes, but when you take a step back and look, you're like, man, like, a year ago she was speaking a word or two and now she's speaking like fluent sentences and going to dance class. And yeah, it's just crazy how like every single day, like she just learns and grows so much. And, you kind of take it for granted. So it's nice to kind of put things in perspective.
Oh, yeah, absolutely. I know exactly what you mean. I have some baby cousins that are, I guess I want to say about 12 years younger than me. And so I've pretty much seen them from the day they were born to, up to today. And even just the year or so that I didn't necessarily see them while we were on lockdown, off and on, they changed so much in just that small amount of time. And that's already when they were like, 7, 8 years old. So, especially the beginning years, it just goes so quickly. It's like blink of an eye and you're in a different stage of life already.
Yeah, and speaking of lockdown, I mean, that's when my daughter was born. She was born April of 2020. So right as the world was shutting down, that's when she came, so it was definitely a stressful time having your first kid in the middle of a global pandemic. But
absolutely,
everything is great now.
Well, I'm glad that everything worked out, and, I'm glad that she's, starting to get a little older. Before you know it, she's going to be going to school for the first time, and it's going to be a very interesting experience for sure.
Absolutely.
So then you mentioned, how do you get involved into mortgage? I'm very curious, what's your history with it?
Yeah, so, I graduated college during the Great Recession, right? So the financial crisis in 2007 to 2009. I graduated in 2010. So I had a tough time finding a job in anything that I wanted to do, or at least that I thought I wanted to do. So one day, the summer after I graduated, a temp agency called me about placing me at a mortgage company for a very, very entry-level position. I was not excited about it. I almost did not even take the offer. It was a temp job. I thought at the time that I deserved, something better. But something just told me, to take it, and took the job. A few months later, I was hired full time. I was promoted and discovered that not only did I like what I did, but I was actually pretty good at it. So I kind of stumbled into the industry, and it's funny because everybody who I've talked to in the past 12, 13 years that I've been doing this, everybody has their own unique story, but like nobody grew up with, dreams of working in mortgages, right? It's just one of those things that it just happens. And, somebody told me when I first started doing this, they're like, if you survive a year, you're just going to get sucked right in, and this is going to be your career. And at the time, I was 23. I'm like, okay, whatever. And here I am. I'll be 35 in a couple of months, and this is all I know. It's all I've done the past, almost 13 years is working mortgages.
That's amazing, actually, and I think that you're spot on when you mention that most people stumble into it. And it's the same thing with insurance too, right? When you ask kids what they want to be when they grow up, they're definitely not going to be saying anything in the financial sector for the large majority, and I'd say even the mortgage part of that is even smaller. So it's definitely something that, like you said, everybody's story is so interesting to listen to because everybody comes into it on a different angle or a different aspect. So that's definitely fascinating. Since you've been in the industry for so long, how would you say that things have changed since you first started? Because coming in on the Great Recession is definitely not an easy time to get involved in something like this.
Yeah, so when I first started, the industry had gone through major changes. So, and from a few different perspectives. So one of them was like regulation changes. So the Dodd-Frank Act was passed in 2010, which completely revamped mortgage guidelines. And then on top of it, the industry was going through a shift in terms of technology. So prior to me starting, files were done like in paper form. So people had, a loan package mailed to them. They would sign it. They would provide all their documentation. They would send it back in. Even internally, they would pass around this huge folder of the loan file from department to department. So the loan officer to underwriting to processing to closing, everybody had a huge file that got bigger and bigger and bigger as the loan process went on. When I came in 2010, it just kind of went more digital. So now the applications were online. We were doing DocuSign. People were faxing or emailing their documentation over. So I kind of came in right as they kind of turned from kind of the dinosaur age of lending, into more of the modern age. So it was twofold, right? It was a big regulation change. So all I know are the new regulations. I was never involved in the industry prior to when things were a little bit more of the, wild, wild west of lending. And also, from a tech side, I've only been in on it since things have been getting a little bit more tech friendly.
I think it's so fascinating that they were still using paper for a lot of that stuff, even as recent as 2010. That just kind of blows my mind. I think it kind of puts into perspective how quickly things have changed with the, invention of the invention of the internet and computers and being able to do everything online. I think it's so fascinating how things have changed so quickly, even just from 2000 to 2010 to 2020.
And you know what it is, too? I think the industry is getting younger. So when I first came in, there was nobody as young as I was when I first got in the industry. Mm-hmm. And a lot of the people were, like, the average age was just a lot older than what it is today. I've seen a huge transformation in the past, I would say 5 to 10 years where the industry has gotten younger, not just from, like, the ground level in terms of loan officers and processing and stuff like that, but even I've seen into management and senior level management, I've seen that get younger. So I think as that shift happens, right, they're going to naturally, breed more technology than I think maybe that older generation. So I think they were a little bit slow to adapt, but I think now it's been getting, it's rapidly advancing just because of like the change in demographics of who's kind of running the show at some of these big lenders.
Yeah, absolutely. And that's good that that's happening too, because, the average home buyer is also getting younger with, who you're working with. I think it's fairly typical for the majority of people now to be interacting with technology on a pretty heavy level nowadays, especially when you're looking at 30s and 40s now that used to be, teenagers 10 years ago. Now they're our new home buyers. So I think it's good that the industry is adapting and keeping up with the times so that, people are still moving forward and on the same page of what they're using.
Absolutely. It makes for a much better experience. It's much like when I first started doing this, we would take somebody's loan application on the phone, right? So we would sit there and spend 20, 30 minutes and ask dozens and dozens of questions, and it was a very long, boring, tedious process. And a lot of big companies still do that. You call, those big major lenders out there, and that's how it's still done. But like with me, for example, I have an online application. Somebody can fill it out on their phone, on their tablet, on their computer in 10 minutes, right? You can answer all the questions. You don't need me asking you and then me filling it out on my side. You can just go and fill it out. And with our phones nowadays, probably half the information is pre-filled out just by the click of a button. Like all of your personal information will just populate, and it just makes it so much easier, so much more convenient. I'd rather be on a phone call talking the specifics of somebody's deal versus asking them about bankruptcies and foreclosures and, where they work and how long they've worked there. Like those are things they can answer on their own very, very shortly. And then when I talk to them, we can talk about the real stuff, the important stuff.
Yeah, absolutely. You can spend the time working on the things that are actually important, because at the end of the day, most of those questions, unless it's their first time, they're going to know pretty much all of them from having been through the process once before. It's fairly typical information to have to get. And, unless it's the first time, and they may have to bug you for questions a little bit more in that case. But I feel like a lot of them are fairly straightforward in what they're asking for anyway. So, just being able to do that when somebody has a moment while they're, waiting at the doctor's office or in between appointments, or they're looking to pick up their kid from soccer and waiting for school to let out, where they can just take that 10, 15 minutes while they have time and just bang it out real quick instead of having to sit on the phone for potentially 30, 45 minutes.
Yeah, absolutely. It just makes things more convenient, the consumer to do things more on their time, versus kind of being stuck to, hey, I have to call the lender between 9 to 5 today so I can speak with somebody. You can do it on your time, and then just kind of schedule an appointment to really, again, kind of cover the specifics of the deal or more of that nitty gritty, but not spend so much time on more of the data entry.
Yeah, absolutely. And, I'm very curious, since you did come in towards the end of, the Great Recession and all of that, I'm curious what your opinion is going to be of how the market's going to be going forward, because I feel like that, a lot of what we've been seeing is very similar in how people are reacting anyway. It just feels like the market's gotten really tight over the past year or so.
Yeah, that's the $1 million question. Like, the big question right now is what are interest rates going to do? What's the market going to do? And, interest rates are tied heavily to inflation. So if inflation is high, rates will inevitably go higher. On the flip side, once inflation subsides, right, we'll start to see rates come down as well. So I'm curious, what the Fed's going to do at their meeting next month. There's some consensus out there. It's split whether or not they're going to raise it 25 or 50 basis points. But the big thing is when we look at year-over-year inflation, those numbers are starting to work in our favor. So the Fed, when they look at year-over-year inflation, they go back 12 months. So in 2022, inflation was a lot higher, especially the first half of the year, than it was the last half and then the first couple months of 23. So every month that goes by, what's happening is we are replacing a higher month of inflation with a lower month. So, for example, February of 2023, right, that's going to end tomorrow. So the February inflation data should be better in 23 than it was in 22. So every month we should be dropping off hopefully a higher inflation number and then replacing it with a lower inflation number. Now, there will be some caveats to that. Not every month is going to be, super low. And there were some months last year that were lower than others. But generally speaking, with each passing month, we are replacing higher numbers with lower numbers. So the year-over-year inflation is starting to get better. So there's a lot of data out there that points towards the back half of this year. We should start to see interest rates come down. But as rates come down, and when I say come down, I want to caution, I don't think we're going to be at the COVID, pandemic levels where we were 2-3%. But if we can get rates back in the high 4s or even like the mid 5s, it just makes the affordability that much greater for potential home buyers. But
Absolutely.
The flip side to that is when rates come down, I predict another wave up in housing prices because property values have held up really well despite the highest rates we've seen in 20 years. So, what do you think is going to happen once rates come back down and people come off of the sidelines? I just see more overbidding for houses like we saw a couple of years ago, because people are going to have that FOMO, right? They'll have that fear of missing out again, and they're not going to want to, wait potentially because they think, hey, rates might go back up. It's going to be a missed opportunity. So you may see people willing to overbid on houses, which is, inevitably going to drive up the home prices. So my prediction to kind of sum it up is I think we will see rates come down slightly as the year goes on. But with that, I think we'll see home prices start to appreciate a little more as well.
Interesting. Yeah, that's I could definitely see a significant chance of that happening, actually. And then, it's kind of hard to predict already for 2023, but even going forward, do you think that that's going to continue going into 2024, or what do you think is going to happen there? You think it's going to come back to lower prices eventually, or is it just going to kind of stay where it's at?
Lower prices in terms of like property values?
Yeah, because if they skyrocket at the end of 2023, do you think that they're just going to stabilize there, or do you think they're going to come back down after a time?
I mean, personally, I think we've already kind of stabilized, because they shot up during the pandemic, and despite having the highest rates we've had since the early 2000s, we haven't seen property values pull back a whole lot. I mean, some areas have dropped a little more than others, especially out west, right? But here in Pennsylvania, especially like southeast and the greater Philadelphia area, we haven't really seen prices pull back. Maybe 2, 3, 5% in some markets, but that's not a whole lot considering they appreciated 40, 50, 60% over the course of a couple of years. So
yeah,
I think we have stabilized at this point, and it really comes down to supply and demand. And we don't have a very big housing supply, and the housing demand is only going to increase. So there's actually a stat that a lot of people don't realize, and this is something that I actually learned pretty recently myself, but the housing market is tied a lot to birth rates. And when we look at the crisis from 07 to 09, it makes sense when you look at birth rates. So the average household is formed at 33 years old. So people move out, they're renting, maybe now they want to start a family, maybe, get married, start a family. So 33 years old is the average of when a new household is formed. So if we look back from the early to mid 1970s, birth rates were very, very low at that time. Now, not on a political subject, I don't want to get political, but that was also the time of Roe v. Wade, being passed.
Mm-hmm.
So we did see a decrease in birth rates in the early to mid 70s. So if you fast forward 33 years from then, that puts us in the mid 2000s. We had less demand for housing. So that just led to an increase in supply, and that was part of it. The other part of it was there was a lot of bad mortgages that were causing people to foreclose, which was also increasing supply. But a high supply is what drives down the prices. So right now we have a very, very low supply, and if we look at the birth rates from the late 80s, early 90s, mid 90s, late 90s, those birth rates were rising. So as we fast forward 33 years from then, that puts us to today through the end of the 2020s decade. I only see housing demand increasing, and we're not replenishing the supply, or we're not increasing the supply as much as we have a demand. So that's why I just think we're going to continue to see home values go up, because when you have more demand than there is supply, right, people are going to be willing to pay more for something if they want it bad enough.
I mean, that makes sense, actually, now you say it, because, just a couple that are, just the two of them and married, maybe they don't have kids, maybe they didn't want to have kids, whatever the situation was, they are more likely to be able to stay in like a small rental situation as opposed to having to buy like a whole house with extra bedrooms. The presence of kids, and particularly having more kids, is generally what causes people to have to upsize. So it makes sense that that would somewhat be tied to, just the demand of how many houses they need. One of the things that I've heard a lot is that the younger generations are generally having less kids than previous generations. So I'm curious to see how that's going to impact house rates I guess you said it was like 33 years down in the future. So I think that's going to be interesting. That's for sure.
Yeah, but even, kids or no kids, right? People still, I think, want something that's theirs versus renting, So, yeah, I mean, whether or not, I did hear that as well, that the millennial generation and stuff like that, I mean, we're not having as many children as past generations, but
there's still quite
we still
a few.
want houses.
Yeah, and even so, even if they're having less, there's still quite a few. And yeah, there's going to be just general couples that just want to own something too, even if it's not necessarily a full house. Maybe they're buying a condo. Maybe they're buying an apartment. They may not be buying a full house. So, it's definitely still a demand there for people to want to own something as opposed to having to put up with landlords.
Yeah, absolutely. And again, if you just go back on the 33 years, so if you see years where or a time frame where, birth rates start to go down. So if we fast forward 33 years from today, then yeah, maybe there's a lower demand in housing because of the lower birth rates that maybe we're seeing now or the past, decade or so. But really right now, the big focus is on, people that were born in the 80s and 90s. All those people now are of that prime age to be buying houses. And there's just not enough houses. Maybe our parents' generation, when they were, this age, there was a lot bigger of a supply and maybe a smaller demand. But given, today's market, that demand is very, very high, and we are just not building enough houses fast enough to really keep up with the demand.
Yeah, and with, the supply chain issues that have been plaguing us for the past, like 4 or 5 years now, I guess that's crazy how time flies. I feel like it's not going to get better really quickly either, because houses don't just build themselves overnight. Usually you're looking at like a 9-month cycle to finish from, start to the end. So it's definitely going to take some time to replenish what we had, as far as extra stock and everything. So yeah, I mean, demand's going to be up for a while.
And what I find too is a lot of these new builds, they are more of that move up home for people, right? So somebody who already bought their first house and maybe is moving up, upgrading, starting a family, getting a bigger house. So I find a lot of these new constructions, that's what they're building because it's just more profitable to build a house on that price point. So it's still not boding well for that first-time home buyer because typically that new construction that is being built, from my experience, might be a little bit outside of their price point, for that person who's a fresh, new working professional, maybe their mid to late 20s, that's not quite, they're not quite there yet for that type of house, unfortunately. And we're just not seeing, or at least I'm not seeing a lot of builders build more of that first-time, home buyer type home.
Yeah, and that makes a lot of sense because usually you can sell those for more too, because if it's a step-up home versus a first-time home, usually the budget, it's just different. It's different levels of how much people are usually able to spend depending on what people have available. So it kind of makes sense that they would be targeting those houses first so that they can get a little bit more out of the time that they're spending constructing. And then you mentioned that, especially for the first home buyers, sometimes it can be out of their budget. How would you say that the interest rates really impacts them for them? Like, how would you explain to a first home buyer how much that impacts what they're trying to get done? This episode is brought to you by We Insure Center of Chester Springs, Pennsylvania. With access to over 200 carriers, We Insure is ready to service all of your insurance needs for home, auto, business, life, and more. Simply call 484-207-6640. Again, that's 484-207-6640, or visit WeInsureCenter.com. Get your free quote today.
Yeah, I mean, interest rates have a huge impact on the mortgage, process. So the rates are a big factor when it comes to a payment affordability. So a year and a half ago, when rates were in the threes, people had a lot more buying power. Today, with rates in the mid sixes to even low sevens, depending on program, credit scores, and stuff like that, a lot of people have just been priced out of the market. So to really give you an example, Amber, I just ran this last week, so it's kind of in the top of my head. But when rates were around 3%, a $300,000 mortgage was right around $1,700, give or take, without taxes or insurance. At 6.5%, that same $300,000 mortgage is now over $2,330 per month. So we're talking like a $630 swing in a monthly payment just by the rate going from 3% to 6.5%. So a lot of people have been priced out of the market, or a house that somebody could have afforded a year and a half, 2 years ago, right? They can't get the same quality of house today as they could have back then. So maybe while they can still qualify for something, they have sidelined themselves because they're holding out for a better market where they can get more house, for their money.
Well, yeah, and with the house prices going up at the same time as interest rates going up, I can see how that can get exponential really quick, because a $300,000 loan on a house isn't getting you the same house today as what it did necessarily 10 years ago. You're getting a lot less house for the same amount that you're paying with, how the cost of the houses have gone up. So, yeah, I mean, I could definitely see how that might price some people out of what they can afford.
Yeah, not even 10 years ago. I mean, obviously 10 years ago too, but even just a year and a half, 2 years ago, because rates have over doubled in some cases. They're up 125%, in the past couple of years. So that's been a big shock to the market, because a lot of people thought, well, rates are going to go up, we're going to see home values drop, but we haven't. Just what we talked about before, that demand is still very, very high. So it's just put a lot of people in a tough position, unfortunately, because they either can't afford these payments, or again, it's what we just said, they're just not getting as much house as they could have gotten previously. And, obviously everybody wants a nicer house, right? So I can see people maybe holding off, hoping or anticipating a better market. I just don't think we're going to see those things work in our favor. Rates will come down a little bit, but I don't see home values dropping, because there's too many forces that are just pushing, that demand. And we just don't have the supply.
Yeah, I mean, that makes a ton of sense, actually, in, thinking about it. Somebody who's not super involved in the mortgage side of things, I think it's really interesting to see your perspective on it, because, it feels unpredictable to most people, I think, as far as, where it can go and how it can change. But there are factors that can kind of help you give an idea of how things are going to go. Not a guarantee, because nothing is, but having all the information definitely helps with predicting something like that.
Yeah, there's a ton of information out there. There's a lot of good regular news sources that I use as well. I mean, I check CNBC, Mortgage News Daily is a great one, but I actually subscribe to some paid services. And there's one called MBS Highway, and the founder, his name is Barry Habib, and he's like a housing/mortgage expert. And he's actually the one that I learned about the whole birth rate thing from. But I'm just always trying to stay up to date with, what's going on. And there's so many moving parts, and there's also a lot of different opinions out there. So it's really, I think, figuring out more of the trustworthy sources, because a lot of people have opinions that, maybe their opinion is swaying, their viewpoint a little bit more, and maybe it's not as objective. But yeah, there's a ton of great stuff out there, either, obviously free news sources. But as a mortgage broker, I like to get a little bit more of the nitty gritty. So I do have a couple, paid subscriptions as well, where I get data every single day, multiple times a day, about the changes to the market, housing rates, everything that's going on in terms of the housing market.
Well, that's fantastic, because, it does change quickly. And so staying up to date and knowing how things are developing is pretty important. I think it just says something really well to your character, that you're, just constantly being involved in it. It's not just something that you're turning on from 9 to 5. It's something that you actually enjoy and are digging into day in and day out. And I think that speaks well to your character.
Yeah, I mean, part of it is I'm just like a mortgage nerd. I mean, for some reason I love this stuff. And again, like I mentioned before, I never had any dream or aspirations of working in mortgages, but when I started doing it, I just discovered that I liked it and I had a passion for it. And I find myself reading this material even at 9 o'clock at night when I'm watching TV. I'm actually paying more attention to my phone, reading an article about some changes to the mortgage industry, than I am watching the Sixers game or whatever is on TV. So a big part of it is I just have a real passion for it. And to me, it's not It's not like in college where I had to read a book or read something and it's like a task, like a chore you have to do. Like I find this stuff entertaining, and a lot of people probably think I'm crazy, but I just I just love this stuff. As crazy as that sounds.
That's amazing though, because that means you love what you do, and that means that you're going to do well at it. Because when somebody's actually passionate about what they're working on, it's just a completely different level of experience and service with that person, because they're putting 110% into it. It's not just somebody that's just showing up to get the job done. It's somebody that's getting up to get the job done well.
Yeah, absolutely. At the end of the day, there's a person at the end of this transaction. I used to work for some very large mortgage companies, and I don't want to take anything away from them. But the process when you work for like a huge company, it's about quantity over quality. And the best way to handle loans at such a large scale is they have to treat the loan process like an assembly line. So basically they have person A work the loan, they work it to a certain point, it goes to person B. Person B works to a certain point, goes to person C, and so on. There could be 5, 6, 7, sometimes more people that are touching the loan file from the application to the closing. And when somebody works with me, I tend to handle that loan from start to finish, or I have a processor that may work side to side with me. But I understand there's a person that's behind that loan number. And unfortunately, with these big banks and lenders, sometimes it's the individuals may have the best intention. The person that you're working with 100% wants to give you the best service. But the way the process is designed, it's not designed to give the consumer the best experience. So that's a big reason, too, why I kind of went out on my own and started my own brokerage, is just because I believe that I can give a better experience. And at the end of the day, it's about that consumer. It's about that borrower, because, it's a loan number in a system, to a loan officer or to somebody working in the profession. But it's not just a loan number. It's not just an address. There's a person. There's a family, behind that. And I think that gets lost sometimes. So that's really a big part of my motivation is, I want to make sure that people are comfortable with the process. They understand the process. And, to me, I get a huge joy. Like when I go to closing and I could stand next to somebody while they're holding their keys and take a picture after closing's over, and you see that smile on their face, like it's not a fake smile, right? Sometimes people take pictures and it's like, oh, smile, right? And you see that like that forced smile. These people are happy. And I work with a lot of first-time home buyers, so seeing somebody accomplish that goal or that dream of home ownership is a huge deal, and that's kind of what keeps me going, So this process could be confusing, could be scary. At the end of the day, right, these are people. This is somebody's loan. This is somebody's house. And that's what really makes me passionate and keeps me moving forward, is really helping people accomplish what is ultimately, probably the biggest financial transaction that someone's going to do in their lifetime.
Yeah. I think that's a really well way to put it, to be honest, because this is a huge investment for most people, and just knowing that they have someone that's keeping the process running smooth and efficient from start to finish, I think that that's a huge relief to a lot of people, and just knowing that there's somebody who actually cares on the other side.
Absolutely. And again, I don't want to do any knock on some of the big companies out there, like the ones that launch rockets, you know what I mean? But again, it's just the way that the process is designed for them to do it at such a large scale. It doesn't bode well for the experience.
Yeah, no, definitely. That makes a ton of sense, actually. Sometimes it's just better to go with the smaller local guy anyway, just because that they're actually committed to getting your loan done, not just the quota for the week. And, it's great when you're working at scale like that, but it's definitely hard to keep the personality in the experience at that point. It's so streamlined.
Yeah, and when I was working for some of those companies, you're doing 40, 50, 60 closings a month. And let's be real, you're not able to give the best of your service to somebody when you have that many clients. With my brokerage, I may close 3, 4, 5, 6 people in a month, right? 10 people in a month. But it's much more manageable because every person, we have a conversation. Everybody is in my phone, saved in my cell phone, right? They can text me, call me anytime. I have closings that I did 4 or 5 months ago, and they still text me here and there, hey, I got this thing in the mail. Do I need this, or what is this? And, it's just a much different experience. And I actually build relationships, with my clients, with my brokerage versus when I worked for the big lenders, I was doing loans in 35 states. So I might be talking to somebody in California or Florida or Texas. And it's like, yeah, you may have a decent phone relationship, but maybe you spent 1 or 2, 3 hours over a 45-day period with that person on the phone. You're really not building rapport. You're not building a real relationship. With what I do now, I see the clients in person. We do a ton of video chats. Like, I'm big on video. I have a lot of cool tools and different software programs that really break down loan programs and really make it super easy for a consumer to understand stuff. And I like to get on a Zoom, share my screen, kind of go over everything, because I want people to be comfortable with what they're doing. I don't want to force a mortgage down somebody's throat. I want to give somebody options, give them the pros and cons of each option. If they're interested, I'll give them my opinion on the option, which one I think is better or which one I would do. But I really want someone to understand the pros and cons of each and then really make a decision for what's best for their particular situation. Because I could have 2 identical loans, and it could be one loan could be better for person A versus person B, and they could be identical mortgages. Everybody has their own unique situation. So I really try to cater each loan specific to that person.
And that makes a ton of sense, too, because at the end of the day, it's the biggest investment they're going to make. So you want to make sure that they have all the information on the table so that when they're making that decision, they're making one that's well-informed. They understand, why I should lean towards this one versus that one. Because if it's just, you should go with this one, and they don't understand why, it can definitely make the process a lot more confusing, too. So I think it's good that, us service professionals go that extra step to make sure that they understand the why, not just what it is, but why it is the way that it is. So
agreed. I feel like if I'm pushing an option on somebody, that I really didn't do a good enough job of explaining it, because I really want the decision to be made and to have a comfortable decision made by the consumer, right? I want them to figure out what's best for them, but my job is to explain the pros and cons, and then they can figure out what makes more sense for them.
Yeah, absolutely. And, with going through this process, I'm sure that a ton of them pop up already, but what would you say is, the biggest misconception people may have about mortgage and how it works?
Well, a big misconception that I hear a lot, and we touched on it before, is, I think a lot of people think or anticipate a major market correction. And as we've discussed, I don't think we're really going to see that because of outside factors, or because of demand factors. But in terms of the actual process, I think people think that it might be a little bit easier than what it is. There's a lot of paperwork involved. There's a lot of questions. There's a lot that we have to verify. I notice a lot of people who maybe have variable income types like commission or bonus, overtime. You speak with them, they're like, I make X amount per month or X amount per year. And then you start to break down some of that variable income, and it's kind of all over the place. So maybe we can't use as much income as they thought. So now we can't qualify for as much home or can't qualify at all. So I think people think that the loan process is easy until they actually start the process. There's a lot of ins and outs. It's not hard, but you have to be prepared. And I think that's why it's important to work with somebody who has your best interests in mind so they can prep you, right? You don't want to just call a lender, do a 30-minute application on the phone, and just get a list of documents. You want somebody to explain every step as you go through so you have an understanding of what you need, but why you need it as well.
Yeah, I think that's a good way to handle it, actually, because, as you said, it's very easy to get caught up in thinking, it's just I file paperwork and that's it. But at the end of the day, people's situations are unique. No person's, financial situation is the same as somebody else's. And things that people think, this comes in every month, it's consistent, that's not necessarily the case. And, just like with insurance, mortgage is very particular, right? The difference between, one income source and the other may seem the same on the surface to somebody who isn't, super into the industry and understanding the ins and outs of it. But, having that experience and understanding how it impacts people and what can be relied upon and what may not necessarily be as strong as people think, I think is really important, so that they're getting an accurate loan, an accurate picture, where they're not getting, pre-approved for something that technically they actually can't afford or is just calculated incorrectly. And then they end up in a situation 10 years down the line realizing that they can't actually afford this house.
Yeah, I actually had a friend recently who her real estate agent, so she's in the process of buying a house with her fiance, and her real estate agent kind of pushed her to use her mortgage guy. So unfortunately, she kind of didn't talk to me for a couple weeks while she was going through this process. And she actually reached out last week and was just running some stuff by me. And that's when I found out, unfortunately, that she was looking to go somewhere else. But what I did also discover is that the real estate agent's mortgage person did not explain anything to her. He was putting her in a product that I personally don't believe that they even offer, because I checked their website. I priced out her scenario on their website, and the option that he said that he's giving her did not show up as an available option. She requested the loan documents last Friday, did not receive them. My thinking is because maybe this loan officer realized that he can't do what he said he was going to do, and now he's probably scrambling, trying to figure something out. But yeah, there's a lot out there that goes into these loans, and you really, really need somebody who's going to sit down and not just push something on you and say, hey, sign these documents and send me over XYZ, but really go into it. For this example, she was looking at doing a 3-year ARM just because, she thinks rates will come down, which I'm sure they will, and she can refinance into a fixed rate at that time. But the 3-year ARM was not an available option. But her mortgage guy did not sit down and review the pros and cons of an ARM. So the pros are you get a lower interest rate, but the cons are that rate's only good for 3 years or 5 years, whatever that time frame is. And you need to know what happens at year 3 or year 5, just so you know the worst case scenario, right? She may not have this mortgage 3 years or 5 years down the road, but you need to know, what if you do have it, and what are the repercussions of that rate adjusting, and what does the future demand or the future rate market look like, to where if it does adjust, what could it possibly adjust to? So honestly, I think given that situation, this particular friend, I think, is going to come back around, and I think she realizes that using her real estate agent's referral maybe was not the best idea. But yeah, I think that's a big thing out there, is people just don't really know what goes into the process of these loans. And I think too, interest rates are a big misconception, and that's just been since I've been doing this. People will ask you, hey, what's your rate? And everybody assumes that there's just one going interest rate that everybody gets. And there's so many variables that impact rate. Rate is a factor of risk. So the more risky you are as a borrower, the higher that rate's going to be. So you could have person A and person B and get totally different rates, totally different fees, because one person could be a higher risk than the other. And that's what interest rates are really tied to. It's just the overall factor of risk.
Yeah, and I think that also goes also to kind of explain how when interest rates are up, you really see mostly it's the people that don't have a lot of money that are generally impacted the most by it, I think, because they're considered higher risk if they don't have as solid of an income source. So I think it's really interesting to see how that affects, people at different income levels as well. I think it's interesting that you mentioned about, different agents also maybe not necessarily checking things through 100%, going back to that quantity over quality conversation we were having earlier. If, the person that you're working with isn't fully invested in your situation, it may be fine, but it also may end up in a situation where mistakes are made a little easier because they're not looking it over as hard.
Yeah, I think people should really almost interview their real estate agent, their mortgage person, because you're just blindly trusting somebody to handle a huge transaction that is hundreds of thousands of dollars. You don't just want to just take somebody's word for it, So I think really asking questions, maybe speaking with several different, realtors or mortgage brokers. And I would say brokers. I think you should always work with a broker over a direct lender. But again, if somebody calls me, well, I would love the business, I would expect someone to do their due diligence and maybe speak with somebody else as well, because you just want to make sure that the person who is handling your transaction has your best interest in mind and isn't just looking at you as a closing, as a commission check, because this is a huge, huge transaction. And you want to make sure that you're getting the best advice for you and not what's just going to be maybe an easy closing for that loan officer.
Yeah, absolutely. I think that's definitely something that's very important to keep in mind. And it's good advice to all of our listeners out there that might be looking to potentially, buy something. Make sure that the people you're working with are people that you can trust and that you understand, start to finish what's going on, right? Because if you don't understand the process, how are you expected to be able to protect yourself and knowing that the person that you're working with actually is invested in your situation? So I think that's really good advice, actually.
Yeah, and I can't tell you how many times in my career I've talked to people. And when I used to work for some of these big lenders, it was a very refi-heavy market. So I would talk to a lot of people who would tell me like, oh, my loan doesn't have this feature, or my loan, doesn't do this. And it's like, well, it does. Like, I'm looking at your paperwork here, and it says X, Y, and Z. And they're like, well, my loan officer told me otherwise. And that's the point that I'm trying to make, is that you really want somebody who's going to go over this with you. Like what I do, I go over the entire closing package with my clients about 3 to 4 days prior to closing. I want to make sure when they're sitting at that closing table that they're not seeing any document for the first time, and that they don't have any questions really at closing. Of course, there could be questions, but I want to make sure that the bulk of their questions and concerns are all addressed and answered before we sit down at closing, because I want that closing to be a smooth, easy transaction. And that, to me, seems like common sense, but you'd be surprised at how many mortgage professionals do not review the closing package with their client, and they just expect a notary to do it. And notaries are great. They know a lot about that package, but they're not the mortgage person. So there could be nuances to that closing package that they're not familiar with, or they don't know, or even if they do know, it's not their situation to deal with. They're the notary. They're there to notarize the closing paperwork. They're not there necessarily to address or answer mortgage-related questions. So that's why it's important or imperative that the mortgage professional does this with the client prior to closing. And it just doesn't happen. It doesn't happen as often as it should. And that's a big thing that I do, is I want to make sure every single person is able to review that package with me before closing, because closing is nerve-wracking, especially for that first-time home buyer. Even myself. I've worked in mortgages for over 10 years. I bought a couple houses, and when my wife and I bought our last house, I still had those butterflies sitting at the closing table signing paperwork, even though I knew every single document in that package. I knew the entire loan I knew everything that there was to know. But even for me, it was still a little bit nerve-wracking. So I can only imagine somebody who's never done it before, who doesn't work in the industry, is not familiar with this stuff. You really need someone to sit down and go over this with you so you can feel comfortable and know that what you're getting into is a good decision.
Absolutely. And actually, that brings up an interesting question for me. So as a mortgage broker, when you buy a house, do you write your own loans, or does someone else have to do it for you? How does that usually work?
So I haven't been a broker myself since I've bought any properties, so I haven't experienced that per se. But just looking at the rules of it, my brokerage could do a loan for me. I just can't be the loan officer. So I actually do have one loan officer on my team. So in the event that I were to do another mortgage, I could do it through my company, Wise Mortgage. I just can't be the loan officer on file.
Right. Yeah, because that makes sense. You wouldn't want there to be a conflict of interest from, the investor side of things. So, them knowing that it's a different person is probably important, I would guess. But that makes a lot of sense, actually. That's very interesting. I never thought about that, actually, before. So I think that's very interesting.
Yeah, I'm not quite sure, I guess, why I can't do my own loan if my brokerage can do my loan, because it's not really a very large degree of separation. But
Yeah.
just when I look into what I've heard is just that, yeah, your company can do it. You just can't be your own loan officer.
Interesting. Well, you learn something new every day, that's for sure.
Absolutely. I'm always learning something in this. I mean, rules are always changing, guidelines, and there's just so much. So absolutely, every day I feel like I'm learning something new.
Well, that's wonderful. And, listen, it's been wonderful having you on today, Brandon. If someone wanted to reach out to get their loan done and they want to know it's going to be done by somebody who knows it well and will put 110% into it, what's the best way for them to contact you?
Yeah, absolutely. I would love to work with any of your listeners, or if any real estate agents have any clients they want to refer over, I would love to help their clients as well. First and foremost, they can check out our website, so wisemortgage.com, and that's WIZE mortgage.com. So on the website, there'll be an option where you can actually apply. You can fill out your contact info if you just want me to contact you. All of the links to our social media pages are on there. But you can also call or text me pretty much anytime at 215-315-9493. You can also email me at brandon@wisemortgage.com. But again, I'm not a bank or a lender, and I've taken phone calls at 11:30 at night before. So pretty much any time of day, any day of the week, you'll probably get a response from me if I'm not sleeping. And if I am sleeping, you'll get one first thing in the morning.
Wonderful. Well, thank you so much. I really appreciate your time and coming on to the show today. It was a pleasure having you.
Yeah, thank you so much. I really appreciate it.